welcome to the Shipper Update. I'm lead economist here at FreightWaves, Anthony Smith, and I'm joined by the one and only Donnie Gilbert. And Donnie, what we were doing in the last Shipper Update was talking about the weekend review. And so we're going to go a quick recap over what happened in the most recent week, and then give some thoughts to the upcoming week, so the week ahead. We also put out a week ahead Sunday release from the market expert side as well. If you're not on those monthly releases, reach out to us and we'll see what we can do. So looking at total housing starts here, Donnie, we saw that there was a 3.9% increase on a month-to-month level, but even more so on a year-over-year level, we saw an extraordinary amount of housing starts, 17.4%. And really across the board, we're seeing that there was growth in the Northeast and Midwest. South only had 1.4%, down 21.1% in the West. But when you look at some of these numbers, you have to get into some of the trends. So for example, Northeast had a total of 171% increase on a month-to-month basis when you're looking at new housing starts. But when you look at the Northeast, you have to think of, okay, there's going to be more existing home sales there. So a slight change in a month-to-month is going to be a lot higher on those percentage levels. And so and also multifamily homes are going to be a lot more popular there. So that's one of the areas you got to look at closely when you look at some of these more densely populated areas versus some of these more sparse areas.
So you think the used housing markets are probably still booming? I mean, I know they're booming everywhere, but probably up in the Northeast area, housing starts maybe a little bit lower, but the used house market is what's overcome all that because it's too expensive to build a new house right now.
Yeah.
They're average 30, 40, 50 grand additional costs up from a year ago because of the price of lumber alone.
Exactly. And so the other thing we're also seeing is permits are actually still increasing. So we're seeing that's when we're talking about manufacturing, and weeks ago, I was always talking about new orders coming in, and those new orders can't kind of stay up to production pace, and so they get put on backlogs. We're starting to see that with builders now. So permits are being issued, but with those permits being issued, they can't get to those orders fast enough. So a lot of builders are slowing it down a little bit, like, hey, wait, we can't take on any new projects. So we're seeing the completion rates get extended from project to project, and we're also seeing housing starts. So if you haven't known, housing starts put out by the U.S. Census Bureau counts when ground is broken on construction. So if you break ground on construction, that counts as housing starts. It doesn't have to actually be framing mid-building material there.
Right, it's prepping the property for the house, and then of course, this works because everybody is so backed up.
Yeah.
It's like you said, it's like a backlog, putting it in inventory.
Yeah, exactly.
Interesting way to put it.
Exactly.
All right, let's go on. What's going to happen next week?
Next week, we also are going to have on our next chart here, look at initial jobless claims. In our next chart, so looking at that, we're seeing it here in near real time. This just came out yesterday. We're going to be watching that one in the upcoming week because, of course, as we mentioned in the last segment, those mandates got put in place or are starting to get put in place. So there might be some voluntary separations. There's still some benefits for some people to get on some of those unemployment levels because of those children benefits, things like that. May keep it a little bit more alluring, but the stamina for those consumers are going to be tested sooner rather than later as we get into this busy season. In our next chart here, we have to talk about an indice that I watch closely, and that is, of course, our flatbed outbound tender rejection index put on against, and that's going to be the blue line. And in the orange line, we have industrial production on a year-over-year basis. And so what we saw just recently is that year-over-year, another increase. So we saw 24.4% for industrial production. On a month-to-month basis, we just kind of peaked out pre-pandemic levels. So we're seeing continuous growth here within manufacturing. Looking forward in the week ahead, we're going to be looking at durable goods and non-defense capital goods new orders. And so those new orders that got put in place are going to translate into production. That production is going to translate into shipments, and those shipments are going to translate into more flatbed activity. And I love our flatbed outbound tender rejection index because it gives us a sneak peek as to what we can expect moving into the upcoming month, because these indices released by the Federal Bureau database is going to be delayed by a month. So the Federal Reserve is going to be delayed by a month. The U.S. Census Bureau delayed by a month. Our orange line here, our flatbed outbound tender rejection index, our blue line here, our flatbed outbound tender rejection index is going to be near real time, daily indices. So get a sneak peek as to what we can expect in the upcoming week, and we're going to expect some moderating growth for our new order segment.
Yeah, and it's good to see these strong, but right now flatbed is heading into their off season.
Yeah.
Roads are going to be snow covered, whatnot, freezing, so they can't do all the road construction. Normally your construction slows down, so it's good to see that strong, and hopefully when it picks back up in the spring, they'll be just as strong.
Exactly. So a lot of fuel left in the tank. Guys, thank you so much for joining me for the shipper update.